Bitcoin and crypto are once again front and center as macroeconomics drives the narrative. To understand where markets might head, we need to split the picture into two time frames: the near future over the next few weeks, and the longer term as we work toward the eventual peak of this bull market. In the near term, everything comes back to central banks and inflation. The Federal Reserve is expected to cut rates by 25 basis points soon, and traders are already pricing that in. The big question isn't the cut itself, but what happens after. If economic data keeps coming in soft, weak hiring, slowing consumer spending, manufacturing contraction, then the market will likely assume more cuts are coming. That type of bad news is good news dynamic usually benefits risk assets, and crypto could get a relief rally. But the flip side is important. If inflation prints hotter than expected, or if wage growth stays stubbornly high, then the Fed may pull back from easing too quickly. That would strengthen the US dollar, raise yields, and suck liquidity out of risk markets. Bitcoin and altcoins tend to struggle in that environment. So for the next few weeks, the battle is really between inflation data and recession fears. Whichever theme dominates will set the tone for crypto's direction. Liquidity flows are also critical in this window. We've seen Bitcoin ETFs become a major entry point for institutional money. If inflows pick up again, they can offset macro headwinds. But if ETF demand slows, or if stablecoin supply contracts, then even a supportive Fed won't guarantee upside. Add in risks like regulation, exchange issues, or geopolitical flare-ups, and the near-term landscape stays volatile. Now, let's zoom out to the bigger picture, the long-term trajectory toward the top of this cycle. Historically, Bitcoin's bull markets have always been fueled by expanding liquidity conditions. If central banks do pivot fully into easing, not just one cut, but a cycle of cuts, balance sheet growth, or reinvestments, that's the backdrop where crypto thrives. It's the same pattern we saw in past cycles. Easier money leads to higher valuations across risk assets. But this cycle has something new: institutional access. Spot Bitcoin ETFs, larger corporate treasuries allocating, and broader acceptance of crypto as a macro hedge all create deeper pools of capital. The size of the inflows will likely determine the ceiling of this bull run. If institutions treat Bitcoin as a true digital reserve asset, then the upside could be larger than many expect. Narratives and adoption will amplify that move. Growth in DeFi, scaling solutions, and favorable regulation will give investors a reason to believe the upside is sustainable. But remember, bull markets always end in euphoria. As valuations climb and leverage builds, the marginal effect of each dollar of liquidity diminishes. Eventually, macro risks like inflation spikes, fiscal stress, or global credit events will puncture the rally just as they always have. So the bottom line is this: in the near term, watch inflation data, Fed communication, and ETF flows. Those will decide whether Bitcoin bounces or keeps sliding in the next few weeks. In the long term, the peak of this bull market will be set by how loose monetary policy gets, how much capital flows into crypto through ETFs and institutions, and how strong the adoption narrative is when euphoria hits. The macro backdrop is the fuel, but adoption and narrative are the spark. Together they'll decide how high Bitcoin and the crypto market can climb before this cycle tops out.